That's, on the RBI's more than 2 lakh dividend. For the Nifty, it now continues to inch above that 22,700 mark. On the way up, it's banks. But other than banks, you've got L&T, which is, contributing quite handsomely, 1.7% higher. Bharti Airtel is a big mover. And some of that NVIDIA rub-off is showing up in IT names. So Infi, Wipro also up more than 1%. But to get back to, the macros, Lakshmi Iyer, CEO of Investment and Strategy at Kotak Alternate Asset Managers, is now with us on the show. Lakshmi, morning. Thank you very much for joining us on this, big day. Your first thoughts on this record dividend given by the RBI to the government. What does it mean?
Good morning. It is definitely the much needed, I would say, the magical infusion or the magical portion that the markets were looking forward to, and a complete surprise. I would say more than double of what the markets were looking at, or including what was actually projected in the interim budget for FY25. So I think all in all, it is really a very, very big bazooka, which will have far-reaching implications, not just from a slightly micro perspective on the government demand and supply, but more importantly, from a larger fisc perspective and the government's ability to do maybe much more than what probably they would have intended to.
Lakshmi, hi, good morning. Great to be talking to you. Just double-checking, right? Bond markets are shut today, right? But you're still in office. But you're still in office, so you're still working. All right, then we don't feel so bad. At least we're not pulling you away from a home holiday. But just to get back to the subject at hand, I think the big question since yesterday, 3:30 when this came out, has been what will the government do with this additional 1 lakh crores of bonanza, right? They budgeted 1 lakh, they've got over 2 lakhs. And that's been the debate, whether this will go in pruning the fiscal deficit target, whether they'll simply spend it, whether they'll reduce borrowings. What's your best guess?
So, well, Surabhi, all of these things are possible if you ask me. It's not that it's either or, but certainly, as I mentioned, the government gets much more elbow room to be able to fructify some of the Capex-led initiatives which were strongly required. Well, one school of thought which markets have been debating also, could we see some rationalization in the tax structure to, ensure or to enable the bottom of the pyramid to pump prime some consumption? I think these are some of the thoughts which are definitely going on. But if you look at the broad math, this would be close to about 60-65 basis points from, a GDP perspective. Now, from a fiscal perspective, the impact could be close to about 40 basis points or 0.4%. Now, will the government decide to probably use that ammo to pump prime its Capex and infra-related spends, which is what they have articulated? That could definitely be, and that's top on our list at the current juncture. And mind you, this is just the RBI payout. There is still the PSU payout, which is impending. So I think the booty is pretty strong and formidable, and therefore that opens up a plethora of opportunities for the government as we speak.
So early right now, but how much do you think the Capex by the government goes up when they announce the elections? Anyway, they've been spending big money, but what could be the incremental growth that we're looking at now?
So as I said, they can divert maybe half of that. So assuming the impact on the fisc was, say, about 40 basis points. So about 0.2% and 0.2. So probably half and half is what they could probably divert towards the more productive sectors. And for long, Capex has been a much desired wish list from a market standpoint, specifically from the capital market standpoint. So I think at this juncture, as I said, too soon to say, and you rightly observed, but probably towing that line at the current juncture, given the fact that the markets had already reconciled to the fiscal deficit that was already outlined, allows some of these to fructify.
Okay, Lakshmi, now let's talk about the market impact. The market obviously will react tomorrow, but the equity side is already reacting. I mean, the rally in bank stocks, I think, is, part of that is resting on hopes that yields will keep moving down. Now, we're already at just about sub 7%. What next?
Yes, you're bang on. So as I said, because it has far-reaching implications on the larger market, including the capital markets, the PSU as a theme, for example, we've been quite constructive on. We've seen buoyancy there. The banking space, which kind of has been, a kind of subservient to the broader markets, that's doing pretty well. From a bond markets perspective, definitely this will. This is in tandem with the buybacks which have been announced, which has got tepid response. But also, if you see the first quarter treasury bill supply also has been cut. So this comes as superimposing as a stronger catalyst, which means are we headed towards 6.75 on the 10-year benchmark in the very near term? The answer is yes. I think you look at the FPI or the foreign portfolio investment buying, that's also pretty strong and robust. Year to date, which is a calendar year, we have crossed 40,000 crores in terms of net purchases. And I think the momentum is likely to continue.
Okay, all right. Lakshmi, good having you on this big development. Thank you for joining in and giving us that quick analysis. So that is the view coming in from Kotak Mutual Fund on the dividend bonanza that the government has received and the implications for the money markets.